Morning traders. Well, if we have a look at our opening calls for Asia, we are expecting a positive open. Our ASX call is up 0.3% for the cash market open, Hong Kong 0.2%, and also the Nikkei 0.8%. So that's where you're going to get the outperformance playing through. But I think US positioning very much in play. If we look at the dynamics that have unfolded, we have seen a higher equity market. But given the dynamics, one could say that if we'd used what we saw last week, the market probably should be down. But that obviously hasn't happened. So I think positioning very much largely at play. I think dealers, market makers, option dealers, were sitting on this short gamma position last week. They were hedging their delta by shorting S&P futures to hedge. They've sit on this inventory position, which they don't want post OPEX, and maybe some of those have bought back some of those positions playing through. Although SPOO's volumes are pretty light at 1.3 million at the moment. But what have we seen, to justify that call? Well, in the UK bond market, we've seen 10s up 5 basis points at 472. Eyeing those highs from last week at 475. German bunds were up 8 basis points. In the US, we've seen US 10-year treasuries nominal at 433, making a new high in this run. 10-year real rates actually touched 2%. So, last week that was part of the reason we were seeing markets lower. In China, obviously the news flow was around the PBOC keeping 5-year prime rates unchanged and 1 year. They moved them lower, but not to this extent the market was looking for. And we saw big outflows once again through the northbound connects with the CSI 300 on the mainland market there, down 1.4% on the lows of the day. But I think the big story there was really about the funding rates in the CNH. Dollar CNH funding rates have moved up sharply. So you've really seen Tomnex rates losing that negative carry. And some big move in 1 month. CNH rates as well, forward point rates, and that yield has moved quite dramatically as well. So, I think that funding rates have seen yuan shorts really being very squeezed quite heavily, and that's caused a big move lower in euro CNH. Dollar CNH has moved lower, and also CNH against the yen has been very much focused on as well. Actually, the dollar has been fairly flat on the day, so we've seen good performance in the Swiss franc, the NOK, some of the Scandies. And dollar yen has actually moved up a little bit. But by all intents and purposes, we've seen a fairly flat dollar playing through. I think if you have a look at the equity move, it's really been buoyed up by what we've been seeing in tech. Nvidia has had a strong gain up over 8% as we go into earnings there. The tech sector in the S&P has been the superstar there. And if you look at the S&P, the tape on the cash, we're not too far away to the highs of the day. We got up to 44.07, settling at 43.99. But as I say, this was all tech, discretionary, and consumer services playing through. 44% of stocks were higher on the day, so reasonably poor breadth given the moves we've been seeing in the market there. So an interesting one. We've seen fixed income continue to sell off, real rates moving higher. We've seen China continuing to be a concerning dynamic, a flat US dollar, but equity markets continue to buy up. I think this is largely down to positioning.